Hello and welcome to the Weekend Investing Daily Bite of 4th of July. Happy Independence Day to whoever is watching in the US. Uh, the markets just running and running and running. The bears in the market are exhausted. They've virtually given up. Even the bulls are getting exhausted in the sense of mental exhaustion that every day the market goes up. So people try to find new ideas. If someday their stocks are not moving, they want to switch to other stocks that are moving. Doesn't work like that. Just stick with your portfolio, stick with your strategy and play along. That's the only thing that you can do. Sensex at 100,000 by 2025. And are you ready? This is the uh, topic of discussion for today. Whether we will or whether we won't, please write in the comment below. What is your view about it? I'll discuss it in just a few minutes. So where the markets are headed, as the title says, the markets seem headed for much higher ground. Nifty, however, today opened gap up, but gave up most of the gains for the day and ended flat. So the way we have been running just after elections, these 7, 8, 9 days, that kind of a market is brewing now, where every move is sort of getting sold into, but nevertheless, every 2, 3 days you are gradually moving up. So it's sort of a sectoral based move where Nifty is getting supported, and probably this will continue till the budget, at least, before any meaningful uh, profit taking may come through, or some more liquidity may come through, that we will see post the budget, because the budget is going to be very defining this time. The 100-day agenda, a lot of consumption, liquidity that will be released, hopefully, because of slabs moving around. So all that is getting sort of built into the markets right now. Nifty Junior doing much better, up 0.5%, so nearly 72,900 there. On the mid cap, very nice move, almost 0.68%, and this is very different from what Nifty is doing. You are actually opening up and closing higher than the previous day and the last couple of days. Small caps also doing the same. Gap up, came off a little bit during the day, but closed higher. So closing of a candle is very important. It tells you what is the mood of the market going forward most of the time. That is the probability it is trying to reflect. If the market opens high but closes down, it means that there is some sort of resistance, there is pressure in the market that doesn't want to go up. If market opens high, comes down during the day and closes higher again, that is a very confident sign that the market is wanting to go up. It was just shaking off weak hands. Small caps up 0.56% today, now at 17,591. Just recall that we were at 14,000 not so far back, so it has been a remarkable ride. Bank Nifty very flattish again, for 0.03%. HDFC Bank disappointing, but it can't run every day, right? I mean, it has run quite a bit in the last few sessions. Now it is resting a bit. Maybe that continuation will come around in a few days. Today's heat map: HDFC Bank, as I mentioned, lost 2.3%. Bajaj Finance lost 2%. But ICICI Bank has taken the mental, the baton forward with 2.6% gain today. Tata Motors on good numbers, JLR numbers, up 2.3% today. You have Sun Pharma 1.5% up, HCL Tech, TCS, Infosys. So IT again rotating back to the top, and doing quite well. Others, mild losses in some stocks, but no real disappointment besides HDFC Bank today. In terms of Nifty, next 50 stocks, you have REC moving every almost on a daily basis. Bajaj Holding moving up very rapidly. You have ABB, Siemens, Bosch. These have been moving almost on a daily basis. Trent is unstoppable. Zydus Life doing quite well. So insurance companies have done well, uh, mostly in the last few days as well as today. LIC, of course, is 2.23% up. There is uh, some talk of tax relief based on demands having being raised earlier. HAL, BEL, all moving extremely well. But what is not getting captured here are some of the sectors that really were rocketing today. So sectoral trends: pharma has come out to the top today, 1.4%. Has done reasonably well, I would say 8% in the last 1 month. IT stocks also doing well, 1.1%. So can you see that there is a sudden shift today into more defensive stocks? So IT and pharma are more defensive, and metals, uh, you know, real estate, auto are not in the lead, but nevertheless, FMCG I was expecting to be up there with pharma and IT in terms of uh, defensives, but that has disappointed at minus 0.2%. If consumption is going to be unleashed in this budget, if then FMCG should be a very big gainer between here and the budget, but maybe there is no plan to unleash that consumption story, which is being touted by a lot of media right now. You never know what's coming. So if FMCG does not perform till the budget, it means that the insiders know that FMCG is not going to get benefited in this coming budget. Pharma breaking out new high. Very actually, it's a classical chart where you can see pharma rally from November 23 till about March, April 24, and then it just consolidated here. And after a triple or even four attempts at this level, the fifth time it broke out, came back, retested this level, and has broken out. This is very, very solid move. I don't think it will come back and break this support anytime soon. So look out for trading opportunities in pharma stocks on pullbacks. Pharma is looking very, very good right now. Stock spotlight is on Cochin Shipyard. It was up 10% today after almost, I think, a 7% move yesterday. And just look at where it has come from. The beginning of the year, it was at 685. Now we are at 2,680. A remarkable move in Kochi shipyard on the day. And this is how the longer term picture looks. 2017-18, it was at 200 odd, then it crashed to 93 rupees, then it came back. And once it broke out, it came back to retest this breakout, and then it has not stopped. 200 rupees to 2600 on the trot. Several weekend investing strategies have made use of this run. Some are still holding this. So phenomenal winner. Don't let your winners go easily. This is what some of the winners can do in your portfolio, and these are the ones who will create that special magic in your portfolio. Don't be afraid of heights is what the usual saying would go. If you are afraid of heights, then the markets are not a place for you, because the stocks that are at the highs, going higher, making you feel vertigo, are the ones who will really, make big bucks for you. Masdoc is another example. You can see from 1800 just this last April, through 3 months back, from April, nearly 2000 rupees, it has rocketed to 5585, 19% up today. Stock has been awarded Navratna status just few days back. It was here when it was awarded that, and on that news itself, it's up almost 30% on that news. And of course, the public sector enterprise block and the defense block is moving up very, very rapidly. This is the journey in the last 3 years of Masdoc. You can see here it was virtually at 150 rupees. Now, within a span of 3 years, it's at 55.85. This stock also, we are huge beneficiaries of this in many portfolios. And again, riding your winners despite interim hiccups is the way forward. Global shipping freights also are again looking up. So a lot of these shipyard companies will have huge orders, not for the defense ones, but even for the commercial liners that are needed. Sensex at 100,000 by 2025. Are you ready? I hope you have written in the comment whether you think it will or will not. If not, so please write it in the comments while I'm going forward. And meanwhile, also subscribe to the channel if you haven't. So Sensex is up 800 times in 45 years. So imagine somebody who is, let's say, 66 years old, and he started his journey at the age of 21, and gradually, he or she brought in the money. 15.9% CAGR is what has been achieved till date. From the start, April 79, Sensex of 100, July 2024, 80,000 achieved yesterday, 45 years and 3 months. This is 80 markets data. If this were to be extrapolated now, just 5 years hence, so uh, when do we hit uh, not 5 years hence. If we extrapolate it to 100,000 at 15.9% from 18,000, how much time do we take? We take less than 15 months. So 46 years and 8 months, and we are currently at 45 years and 3 months. So you have 1 year and 5 months is the duration in which you achieve this. Of course, markets are never linear. They will go up and down, but over a longer period of time, that is the trajectory that is available. So all these big numbers, 80,000, 60,000, 100,000 sound big, but if the underlying current is running at 15.9%, you can't help but achieve those numbers. And this is the Sensex or Nifty numbers. Your portfolios are likely to do much better than that. So you will achieve much higher CAGR if the strategy does well. So Sensex uh, only has to go up another 24% for the 1 lakh mark, already up 11% in calendar year in less than 6 months. So you can imagine how quickly we can go there. Also, from value research, I saw this very nice infographic that Sensex, the journey of Sensex, where the first uh, doubling from 1,000 to 2090, 1990 onwards, and the previous to 1990 also is extremely robust. The 20 years before that, from 11 years before that, but from 1990 is where the most interesting part is there, where you first doubled uh, in 1.5 years from 1990. Then in the next 7.7 years, you again went from 2000 to 5000. So again, the same rate roughly would have been maintained because it took 7.5 years to go 2.5 times. Then you doubled again in 6.3 years. The next doubling came very, very fast. So next doubling came in just 2 years. So you actually went 4x in a matter of 8 years only, and that caused a period of consolidation after this, because it just went away from the trajectory, and the next doubling happened in 11.5 years. But if you will calculate between 1999 and 2019, it would be very close to the 15.9% mark. And the last doubling has taken just a little over 5 years, going from 40,000 to. So if you were to extrapolate that, then maybe somewhere around 2029 is where you'll hit 1,60,000 on the Sensex. And Mr. Agarwal, who's the guru of Indian investing, India market investing, also said today the target of 1,60,000 for Sensex by 2029. And whether it will or will not is a separate issue. Whether he's right or wrong is also another separate issue. But the fact that for the last 45 years, if the market has been running with a certain trajectory and nothing else has changed in terms of lowering of growth, but in fact improvement in terms of lowering of inflation, lowering of interest rates versus the past, there is no reason why the same trajectory will not continue. That is the argument that is being made, and for that reason, you know uh, you need to catch the running train. Now a lot of folks have been sitting out, or I know personally people who moved out in COVID and have not yet been able to come in. I know folks who have been waiting for a price earnings on Nifty to come to 12 sometimes, and then they will buy. I know folks who have in the last 6 months exited their portfolio thinking that elections will be very volatile, and US presidential elections will be very volatile, and inflation may come back. All these narratives are okay, but how do you make a decision basis that? Because there are 10,000 variables. What if in the next 5 years, Indian corporates, the top corporates, have a bout of growth which has been unforeseen? Can you afford to not be invested? Is the question. Uh, there are a lot of fears in the market, and there are always a lot of fears in the market. There is a specter of a war. Once Trump comes in, most likely that looks like it. There may be some tariff war with China that may impact global trade. There may be some war related to Taiwan. There may be escalation in the Russia-Ukraine war. So all those things can happen. But while all those risks are there, it may also happen that India may see the best 5 years of the last 50 years. That you cannot wish it away, or you can you I mean, if sometimes it may happen that, let's say I was in 2003, And I said the next 5 years, I'm willing to not look at India. Those were the 5 best years in the last 2 decades. Is it possible that the next 5 years may be the best 5 years of the last 50 years? It is very much possible. Is it possible that we may do a Japan in the next decade? It is possible. So you cannot afford to stay out. If you want to have hedges, buy gold on the side, buy 50% gold and buy 50% equity. Most likely, most with very high probability, you will never go wrong. If you are not invested in the market, bring 10% of your money in. Watch it for 6 months. If it goes down, bring another 10% money. If it goes up, bring another 10% money. Both ways you will gain. There is no question of sitting out. I mean, unless you are in that situation in your life where you don't want any risk, you may be, 75 years old and you want a very peaceful, next 25 years of your life without wanting to look at the stock markets, that is fine. But most of you are not there. You need to make sure that you upgrade yourself in life. You make sure that, you make you're living better than what it was yesterday. You have to beat inflation. You have to beat a lot of odds that will come through in the next 50 years in terms of costs of education, costs of real estate, where it is going. This is the only way you can, beat the markets. And India is such a fantastic runway that we have. You don't have to do anything. You just don't make stupid mistakes. That is all that you need to do. You don't have to hit sixers, but you don't want to get bowled also. That is the only situation that needs to be done. So that's all or the message for this video. Thank you so much for watching. Don't forget to write your comment where we are reaching 100,000 by December 25 or not. And do subscribe to this channel. My team will be very motivated once they see more likes and subscriptions on this channel. Please spread it amongst your friends also. Thanks. I'll see you in the next one. Bye.